it actually goes back to a very old piece of common sense, which is you can't do what everybody else does and expect a different result. And so, we build the portfolios by the ground up, but that selectivity is really a defining characteristic. And you're right, it's especially true outside the US. I mean, outside the US, active managers have an opportunity to add so much value. And I think traditional ETF investors who had very little choice, oh, I could be an emerging markets fund, I could be in an international global, what they tend to be doing is owning a huge amount of stocks with a lot of huge mediocrity in it. And the reason there's so much mediocrity, especially internationally, is because a lot of the biggest companies, when you go outside of the US, almost every major economy was socialized at some point in its history. And the result is that in almost every market, the largest companies are companies that were once state-owned or state-controlled. And we started the conversation with Dan on the subject of culture. That is a great example of a cultural foundation that is rotten. You don't have accountability. You don't have that entrepreneurial snap. You don't have that vision of a founder and that sense of accountability and responsibility. So the largest utilities, the largest energy companies, often the largest media companies, the largest consumer products. I mean, you can go, whether you're in France or Italy or whether you're in Asia, it's amazing how many, or South America, how many of the largest companies in the index have these really culturally, this sort of rotten foundation.